This video using real trades could potentially change how you see financial markets forever. It provides a shortcut to professional thinking. It will explore Rule 260, understand percentages. This is perhaps one of the most important rules that you'll ever learn inside financial markets. Let's run the numbers. In yesterday's video, I talked about the importance of mindset. When investors and traders commence, they exist firstly in the panic zone, then they move to the blame zone. Both zones make you lose money. The purpose of our global family is to take you into Zone 3 and Zone 4. That's where you make money and you keep it. To do so, we must think differently. For example, on the 6th, the market looked like this. On the 10th, the market looked like this. The majority of people would say there's no way you can make money in a market like this. After all, you can see very clearly that prices have been coming down. Using the knowledge inside the masterclass and the CTKS method service smart money buy and sell levels, I did a wave trade. Between the 6th of July and the 10th of July, you can see those two dates here. You can see the sell levels and the buy levels. All up, it was a profit of around 18.9% over 4 days. What's important here is not the trade, it's not the profit. It's the fact that the markets look like this. It's also that I use Rule 260, understand percentages. Specifically, I used and leveraged LV21 and LV22 from the masterclass. But to understand these two living video lessons from the masterclass, you must have done all of the previous masterclass lessons. I also had a very good understanding of the smart money buy and sell levels through the CTKS method service. There's a lot to understand when it comes to Rule 260. It's a multifaceted diamond. When you understand percentages, you don't actually have to chase big percentages. You can chase little ones instead. One thing to take a note of is the return on investment, which is simply the invested amount and the returned amount. And you look at the returned amount as a percentage of invested and you figure out if it changed, either in your direction or against you. Here, this was a profit. If you find yourself making losses, that is okay. That just simply means you weren't synchronized with the market. You therefore need to boost your knowledge and boost your level of understanding of smart money buy and sell levels. One thing to note, this particular return occurred over the span of 4 days. Therefore, the annualized return, if this return was kept on being rolled over, was 723.7 million%. Of course, that's a crazy percentage. But what would happen if you didn't want to roll that 18% over and risk your account every time, but you just sought to make 18% 91 times in the year, which is 365 divided by 4. That is literally every 4 days you got this return. How much would you then make if you did that every 4 days? You'd make $51,693 from your initial $3,000 investment, or 1,623%. What I'm trying to explain here, this 18% when cumulated can become very, very big. Professionals do not seek to gamble inside financial markets. They understand the market's pulse. They know objective dynamic market structure, or CTKS structure. They have very high levels of knowledge. They do the analysis and they're guided by price reality. They also seek to make money when the markets are going red. Unfortunately, inside Zone 1 and Zone 2, people, when they see the red markets, they say, either I'm not participating, I'm going to wait till it's safe. That means it goes green. Or, which is more likely, they're selling. Why is that? Because panic is gripping them. Let's go through a couple more trades, and I want to show you 2 trades that I did on July the 10th, yesterday. In yesterday's video, I spoke about opportunities. Opportunities are everywhere. This trade on storage was made when the markets look like this. Actually, that's when the sell occurred. The markets were still deep red, and they were a lot redder than that. What do we see here? I took $1,000 in storage and turned it into 1053, approximately a 5.4% return, and that was done in 3 hours. You can see the annualized return, and if you know the calculation of the mathematics, you can't do an annualized return within 1 day. You always have to +1 it, or it becomes undefined. In this case, it was pretty big. Congratulations to our CTKS Global family who leaned in and borsocked. That is, buy on red, sell on green. I'd like you to focus just on this area. Also, the understanding that this was done in 3 hours. As it was done in 3 hours, let's just round it up and say that we could do it in 24 hours. Not 3 hours, but 24. So we could do this 365 times a year. We're just looking at creating that marginal return, not to roll it over, not to get this crazy percentage, but to get something that people would feel a lot more comfortable with. When we multiply this 5368 by 365, we get nearly $20,000 from $1,000. You're just turning over the same 1,000. You're not even adding to it. It's still the same 1,000, just 5%. What does that turn into? It turns into a return on investment of 1,860%. Why do I have this text here? Buy and hold to get 200% return. How long? The concept is a lot of people want to see 100%, 200%, 1,000%, whatever percentage return, but it's really, really big, and they simply want to put one piece of money in and get a massive return out of it. Of course, this is a doable thing if you're an investor and maybe you want to hold on for a very long time. The trouble with big percentage returns, they definitely take a lot of time to create. And the threat is always there. If you see a really red day, you may actually abandon ship. Let me show you another trade that I did yesterday. This was done in approximately 4 hours. Here, I took a lesser amount because I wanted to show you a different way of approaching the market, about $500. Turned it into 527, which was about a 5.45% return. Remember, this was not done in 24 hours, but only 4. If you continued to roll over that $500 and just invest everything and keep on getting this same return, you would grow your account by that annualized return on investment, which is a very crazy ROI. Don't forget that this particular trade occurred in this red day. I find it's one thing to talk about something, it's another thing to do it. I wanted to show you it's doable, and I wanted to give you a couple of examples. Now we're going to look if we just grew this smaller gain or loss from a smaller account size, what would that do in the span of a year? I'm also being conservative. We know that that trade occurred over 4 hours, but I'm using a daily basis. So I'm just saying that you would earn this $27.25 just each day. What would that turn into as a return on investment? You would grow that $500 to $9,946. It's not a bad effort if you think about it. Nearly a 1,900% return. Not 200%, not 400%, 1,900%. A lot of people say, I'm an investor, I'm not a trader. Well, the first thing we know is that all investors become traders anytime they buy or sell. So buying and selling effectively is very important, and that's what traders excel at. Traders specialize in timing the market. Professional traders are masters of their own emotional management. They're calm and balanced. They are their own financial advisor as well. How do you approach the market to get these kind of returns? The first thing you must understand, and this is a must, it's an absolute mandatory thing, you must understand where smart money is buying and selling inside the Tier 1 charts. If you don't have this capability, you will continuously desynchronize from the market. And what's the problem with that? If you are desynchronized from the market, you will make losses. If you're synchronized, you will make profits. That's Rule 603. Traders and investors don't take money from other people, contrary to what is believed inside Zone 1 and Zone 2. The markets are huge. There's not another person sitting across the table from you, just having an equal amount of money. It's not a gladiatorial, combative approach to trading. Everybody is doing their best. If somebody sells, they sell for a reason. They feel it's the best thing for them to do. If you buy, you feel it's the best thing for you to do as well. It's actually a cooperative market. It is not a competitive market. This shift in mindset is very, very important. Decent people do not like to disadvantage others. And you're never disadvantaging anyone if you get a profit. Trading is not immoral. It's a very good thing. It provides liquidity. It's actually a cooperative market. It is not a competitive market. This shift in mindset is very, very important. Decent people do not like to disadvantage others. And you're never disadvantaging anyone if you get a profit. Investors tend to hodl or hold on for dear life no matter what price is doing. This creates an absolute roller coaster of emotion and often a lot of sleepless nights and incredible stress. All financial participants are paid by their synchronization with the market. You cannot be synchronized if you don't understand the price is always moving in a wave. Even in an uptrend, price is going down and then coming up, going down and then coming up. In a downtrend, price is going down and then coming up, going down and then coming up. You can always make returns in any form of market if you are synchronized and you get on the right side of the percentage. Understanding the smart money buy and sell levels. Understanding how to get into synchronization and do three-dimensional risk management. And then you must have the knowledge to get all the way down here to LV21 and 22. As a lecturer in first and second year statistics for many, many years, I saw a lot of students neglect their foundations. When students neglect their foundations, what actually occurs is they try to build a skyscraper of knowledge and then just discover they don't have a foundation. If you have a house and don't have the foundation, forget about the walls, forget about the roof, forget about the second story. It's not going to happen because it will all collapse. You can see there's a lot of content inside the masterclass and it's always added to as well. The masterclass may seem expensive, but a lack of knowledge is way, way more expensive than that. And I would like to thank Oscar Bollinger for his kind generosity in offering a CTKS partial masterclass scholarship. If you would like to apply for that, the link is in the description of this video. When we talk about Rule 260, understanding percentages, we know that if price is actually decreasing, it's putting us on the right side of the percentage. We also realize when we make certain percentage returns and just do that on a consistent basis, we can witness incredible percent gains. But this does require knowledge. It also requires that you understand the Tier 1 chart direction, especially the Tier 1s. They are the global engine of financial markets. We've seen if you turn over your profit, you can still do very, very well if it's a smaller amount. Even smaller amounts can do it, and don't forget, you're only trying to turn $27.25 per day to get up to this. Even if you had $9,000 in the account, you only want that $27.25. If you let that sink in, that's quite astounding. Why is it astounding? Because you could use some of that other $9,000 and get much more than $27. The other thing to note is that when we look at commercial rates that are out there for savings accounts, you may be lucky enough to get 5% per annum, or maybe even more, but you'll have to give them your money for probably 12 months. Because it's 5% per annum, that means in 12 months. To buy on red is not a thing that happens inside Zone 1 and Zone 2. People buy on green, which puts them on the wrong side of the percentage. In Zone 3 and Zone 4, people have a completely different way of thinking. In Zone 3, we borsog. We buy on red, sell on green. There are so many ways to buy and sell as well. And these methods are covered off inside the masterclass. When we look at the market today, we can see it's reasonably green, but not completely green. The greatest gainers in the past 24 hours are Wrapped Bitcoin, Matic, Mina, Carver, eCash, BNB, Bitcoin Cash, Cake, and OKB. You can remember a couple of days ago, eCash was the greatest loser. What about the greatest losers? Top 100, Maker, Aave, Ape, Conflux, Compound, Atom, Shib, AVAX, and Peppy. As you've watched to the end, I'm going to give you a special bonus, something that will help you to identify opportunities. What we're looking at here is the S&P 500 futures. The S&P 500 is marked up inside the service. Also, Bitcoin is marked up inside the CTKS method monthly service, as is total crypto market cap. Have a look at this. This is really interesting. We saw a bounce in the main market, and I flagged that a couple of days ago as a potential probability. One thing that you can keep your eye on, if we see a wholesale breakdown in the S&P 500 futures, the NASDAQ futures, other kinds of market index futures, that could lead to a breakdown in Bitcoin and total crypto market cap. But if we see the opposite, if we see a surge, that could also lead to a surge in crypto. You need to look widely across your charts, and that is the purpose of the CTKS method monthly service. Another very important thing to note is total crypto market cap. If you don't know where smart money will lean in and support price right across crypto, you're losing out on incredibly valuable information. Yesterday's video, we saw that when we turn on the indicator to see where smart money is buying, around that $1.127 trillion mark, we were about 0.7% away from it, and we were 1.76% away from overhead resistance. Now fast forward 24 hours, we've got 1.76% if we sell down to that next support, and we're only 0.69% away from that overhead resistance. You can see that this structural line of around that 1.127 trillion held very well. We had a crossover, which meant the market went positive right across the board. These are the kind of signals that I focus on in order to do those kinds of trades. One thing that we note, price went up and shot up through all of this smart money sell resistance. What happened? It naturally got deflected. That's what sellers do. Bitcoin is currently trading at 30,384. When we turn on the indicator, and this could be a little hard for you to see because of the different lines used, I'm just going to do a quick overlay. Smart money buy and sell levels are incredibly important to understand. When price was just rallying up, where was the smart money sell level? It was around that 30,933 mark. And you can see it tapped it and died. Where did it die? Where was the safety net underneath price? It was that smart money buy level. When price is above, it's a buy level. When price is below, it's a sell level. And it was at 30,410. The thing to note with the CTKS method, it marks up all of price history. And with Bitcoin, that's from 2009. This is not recent indicative price. It's a completely different way to look at price structure. What did we see yesterday? We were coming close to the safety net of 29,943, but we rallied up to the next smart money sell level because price was below. We're just pretending the price to the right doesn't exist. When we shot through, we had massive short liquidations, which spiked us up to 30,933, and then massive long liquidations, which spiked us right back to where we were. Many thanks to the community members who reached out and expressed their gratitude for having these levels inside the CTKS method monthly service. These charts take hours and hours and hours to actually chart up. With the service, you're just given the indicator that you can overlay on your own charts. What we see with current price now, we're about 1.91% away from the next major smart money sell level and about 1.55% to go to the next smart money buy level. And we're just kind of hovering around 1. It's not necessarily a buy level or a sell level just at the current time. It's looking a little bit more like a sell level at the moment. But how does it work? If you can't get above, you're going below. But if you can't get below, you're going above. There are so many rules that you need to be able to understand and integrate into your trading and investing, such as no alt can escape Bitcoin's gravity. As the alts go, that is because Bitcoin is going that way. If you look at this particular pattern, that will be playing out on the alts. Understanding how percentages work can absolutely change the game inside financial markets. Hopefully, one thing that can come from this video is that you don't need big percentages to make big percentages. And if you find that your friends are running around saying, oh, I'm after a 10x return or 2x return and whatever, you can say, well, no, I'm quite happy with between 2 and 5%, but I get it all the time. Keeping a positive attitude is critically important because you're participating when others are abandoning ship. You're there sailing the choppy seas. That means you need a lot of mental toughness. That's why we have the CTKS creed. We are dedicated and committed. We either win or learn and never blame. When you get a loss, just look into it. What knowledge were you missing? Were you synchronized? Did you know the smart money buy and sell levels? Did you know the intercorrelation and interconnection between charts? Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again tomorrow. Bye for now.